Hey, this is Warren Redlick. I am here with my friend Sat. Sat is another long-term, very bullish, very passionate Tesla investor. We were talking the other day about Rivian. We both like Rivian, but we both have concerns about Rivian's future. And I'm a little more bullish on Rivian than Sat. So we were having this conversation, not on Zoom, not for YouTube. And I said, hey, this would be a really good conversation for YouTube and for X. So let's have this conversation. Sat said, okay, Sat, what got you first interested in Rivian and what why are you so passionate about it now?
Well, I noticed it from the very first time they announced their vehicles, and I saw them first at the LA Auto Show. So, and I thought it was a pretty good product. I just want to see how they're going to do. And it's been a few years now. And my focus, part of the reason why I'm more focused on Rivian is because I think they had the most success or possibility of success, second to Tesla. But despite that, I feel there's a certain amount of concern that I have that I've seen a pattern because I've been following Tesla since 2006. So I've seen multiple waves of, I consider this the third wave of other EVs that's coming around. And I still see consistent red flags. And so that's part of the reason why I'm more concerned about Rivian because they have the best chance of surviving, but they still have major red flags, at least in my view.
I mean, I think we're on the same page in that when we look at the other EV startups like Lucid Motors, Aptera, obviously Nikola, there's been a whole bunch of them out there. Rivian has seemed the most promising. Like for me, Lucid Motors was always like from September of 2020 when they had the reveal, I just like, wait a minute, this doesn't add up. I started seeing red flags all over the place. With Aptera, I keep seeing red flags. And I'm always struck by the way that whenever I make a video or make a comment that's critical of one of these startups, there's this herd of critics who are those herd of supporters for the product and the company saying, no, 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 you don't understand. Uh-huh. Okay, I don't understand. But they don't answer the questions. That when you bring up the red flags, they don't address the red flags. They just say, well, and they come up with something else. So do you encounter that when you talk with people about Rivian or the other EV startups? Or is it you're maybe quieter about it so you don't, because I'm posting it on X and I'm, posting YouTube videos, I'm getting comments. I don't know if you're having those kind of encounters in your
Well,
experience.
I would say I'm a little quiet on the Rivian, but whenever I see Rivian content, I would make a comment on it and to give more color because there's this overwhelming enthusiasm for the company, which I understand. I love the product; it's great. I sat in one; it's really great. It's just that you still, as a business, fundamentally, every business has to make money. You can't just keep on losing money and then expect to be sustainable. So it's not the product that I have a problem per se. I think they did a great job. It's just that if you don't make it in cost under the cost, then it doesn't work as a business. It's business 101. And so that's where I give color to the situation where like, hey, I don't think it's because I see this overarching theme of they just have to get to volume production, just produce more. And if it was just about just that one major metric that as a primary part of the problem, we wouldn't have this conversation ever because we
Okay.
would see the light at the tunnel, at the end of the tunnel, but that's not the case. I don't think it's, and the reason why I don't think it's the case is because it's been too long so far. And so there's some fundamentally, I think, things that need to change. And I'm comparing it to Tesla, obviously.
The background of that started this conversation you and I were having is they released their numbers for production and delivery, and there was kind of I would say, a big red flag that they produced 9,400 vehicles, but they only delivered, just under 8,000. There was concerns that, all of a sudden maybe they don't have buyers for their vehicles. And that's sort of like they had been delivering well, and it was like a bigger gap between production and delivery than we expected. And does that mean there's not enough sufficient demand for the vehicles? I think the larger question that I focus on with both Rivian and Lucid is if it costs you $400,000 to make a car and you sell it for $100,000, that's not a good business model. So what are you seeing? What are some, you mentioned red flags. What are some of the red flags that you see with Rivian?
Well, the production for their truck has been 2 years. And the same juncture for Tesla is around 2013, 2014. And it only took them 18 months for the Model S to reach 25.2% gross margin. Plus, right? There are 2 years. Yes, I understand it's after the pandemic. They had a bunch of, their costs went up. Everyone's costs went up. There's interest rate stuff, but you can't pass 2 years and say, hey, you went from negative 133% gross margin to negative 3%. And when is the break even point? Like, it's not going to be mentioned. I'm pretty sure they have it internally, but it doesn't look like it's going to be within this year. And that's not, I mean, the problem with that I saw was in 2022, they ended with negative $6 billion. They spent $6 billion for the production of 24,000 plus or minus vehicles. And that same juncture around 23,000 that Tesla had, they did not lose 6 billion. They went from like $360 million of negative to negative 72 million. Some numbers like that. They increased their income like immensely. You could see it with their financial within that year. And so Rivian getting into volume production, it just doesn't seem plausible if you're losing that much. And if you're losing more because of the pandemic, I get it. But 6 billion versus 400 million is different. And the reason why was Tesla's market cap was 4.2 billion in 2013. So they essentially spent like 50% more than the entire market cap of what Tesla was when they're producing the same amount as Tesla. And so the capital markets are kind of favoring the EV space because they see Tesla as profitable. So they piggyback up off of what Tesla has done, making it a profitable business. And it could be profitable. So they tap the capital markets. They had 16 billion in cash alone, which is like 4 times more than the market cap of Tesla at the same juncture. And so their valuation was way crazy, went up to 100 billion, which didn't make any sense. And yet their spending is 6 billion. And even this year for 2023, they're on trajectory for 4 billion, spending 4 billion. So it's still the same market cap of 2013 of Tesla. And it's just, they're still producing the same, relatively same amount in 2014, like respectively, right? So they can't be spending that much more. And it's only 10 years later and say that you're on a very efficient use of your capital. That's not a very efficient use of capital. And that's the biggest red flag. If you don't have a good, efficient use of your capital, there's no way that no matter how many products that you make, that you're going to be financially sustainable. You're not going to get to the green.
Yeah, so I'm just to give people some context, their numbers that they reported at the end of Q3 2023, which is, their numbers reported as of September 30th, 2023, which they reported, in October, I think. They had $7.9 billion cash on hand. They had another $1.2 billion in short-term investments. And then their cash flow was, they had, in the first 9 months of the year, they had used $3.8 billion in operating activities, another $1.9 billion in investing, and they received $1.5 billion in financing. So they really burned a lot of cash just in 9 months. I think they're on pace to burn more than 4 billion. And they had 7 point, maybe 8 billion, let's say, or 8 or 9 billion total cash and short-term investments. I think it's like around 9 billion in cash and short-term investments at the end of the third quarter. So if they're going to burn another billion a quarter, let's say, there's a point in which they run out of money. My positive take on it is if you believe management, I saw an interview with RJ Scaringe. I've seen, maybe it was the CFO talking, maybe it was an earnings call. They had projected they would get to cash flow neutral or something along the lines of cash flow neutral sometime this year. And they had been making changes like building certain motors in-house that were less costly. I think they were working on changing their battery supply to lower costs. I think fundamentally they designed a vehicle that was too expensive to manufacture. It's too complex. And there was an in-depth conversation with RJ Scaringe, the CEO, about the next vehicle they're going to build, the R2, and how they're defeaturing it compared to R1. They're making it a much simpler vehicle so that it's much simpler to build, so it's much less expensive to build. What do you think about those, their pitch that they're going to get to cash flow neutral on the existing vehicle, and then the next vehicle will be less expensive to build?
I hope that's what they're going to be able to achieve, because I don't know all the manufacturing hiccups and issues that they have, but I don't see it going beyond break even for the R1, the truck. Yeah, the next vehicle, obviously, you're going to learn from your mistakes, and they have to be in the green for the second one for sure. But even the first one, then it needs to be positive. Like you need to have a gross margin that's positive to continue doing it. So I know they did tremendous amount of job of reducing it from negative 133% to 33%. That's a huge jump, and progress is being made. It's just that like it just reminds you of like reiterations and like the Kaizen concept, right? Of continuous improvement. Is that if you have like because I'm an artist too, right? So
Yeah.
and I've taken transportation and product design classes and even illustration classes. And if you do proportions of whatever you're drawing, if it's wrong from the very beginning, your blueprint of your drawing is wrong, it doesn't matter how many changes you make with the shading. Like you could change the lighting, everything. It doesn't matter because your proportions are wrong in the first place. And that's where I feel like what's the issue is that you draw out these sketches of the vehicles, you have the interior design already, laid out in terms of design, and then you go through the material list of what the cost of each of those are. And why is it that that material list wasn't checked and seeing if you can what the cost of those materials are, and to be very, very like conservative on those because costs could overrun really easily in a capital intensive industry like the automotive industry. So like to me, it's like you have to go back to the drawing board and say what's the features that we need to get rid of. It's not the features that you put in that's like really like the thing that makes the product really great. And when you're running the business of like the design, there's no deficiency of ideas, right? Designers are creative, they got creative people and the entrepreneurship of like trying to get the best product out. I can feel that passion in the product. The problem isn't how many features you put into it. Like people don't know that I don't think they know a lot about the EV space in terms of like there's a lot of other companies that tried. Dyson, the vacuum cleaner, they tried making the founder tried to make a car. He spent $600 million for a prototype, and it's like put everything in it, 300, 400 miles per hour, all this gadgets and tech and everything in it. Great, they made a prototype. How much does it cost? Like $250,000. Nobody can buy it, right? So
Right.
he gave up on it, right? So it's like it's not that you can't make a car with all these features. It's just can you make a car with enough features that's going to be strong enough as building a brand with it, but not go overrun with the cost and make it profitable. That's the hard part. And that's why when Elon came up with the Model S, it didn't have FSD, it didn't have all the cameras and all this other stuff. They just wanted to produce a car that's profitable. It was Spartan and minimalist, and they took the minimalist design and brought it to the automotive because they had to be, because the focus was on the battery pack, the cooling system, the liquid cooling system, and the software. So they didn't try to also make a product that was fighting with the same exact features that a gas car has or exotic cars have or high-end car has. Of all the beautiful, interior design, leather, polished stuff, they didn't want to compete on that side. They want to compete on what's good about the EV technology. And so I feel like when Rivian's interior design looks like a five-star hotel to me, but it doesn't add more value because the interior looks like a five-star hotel. Because at the end of the day, it's a automotive product, not a place I'm gonna sleep in. So I think it's beautiful interior. I think they have too many suppliers, just too many things. I could count like at least 6 different parts just on the back of the seat, and Tesla had one,
Yeah.
one plastic thing. They had this one, right? So like that complexity by itself and that back section of the headrest alone is like 5 times more things that I saw that adds zero value to the actual vehicle.
Right.
Like it doesn't make it more like nobody's gonna point at the back of the headrest and say, "Hey, I have a hook there that's like a wood piece and then a metal piece that makes it look polished." Like that's nobody's gonna say that as a distinguishing point between the brands. So I don't see it as an added value, and that's where like I feel like the fundamental part of designing that car is like, just too much stuff that they put into it, wanting to be too enthusiastic and wanting to put everything into it, and then the the management didn't say, "Hey, we had to stop it here because it's going to be too much." But it's ambitious, but without cost, it's a design project. You could do that in animation where you don't actually have to build a project. Like you don't have to build a product, but that's not what we're at. We're actually having to physically make that vehicle. So that's why it's the biggest red flag of pretty much all of them. Other EVs that's failed. Either they put too little and it was so bland and too cheap that nobody wanted to buy it, or it's like too much design, too much passion into the product that they can't make the cost work. And that's the biggest red flag.
Just some context for people, and I'm going to add a little bit more criticism for Rivian here. Their gross margin in Q3 of 2022 was a negative 171%, and their gross profit per unit or gross loss per unit was $139,000. They lost $139,000 a car. Their numbers improved in this category to Q3 of 2020, again, pretty consistently improved to where you get to the Q3 of 2023 and they're down to a negative 36% gross margin and only losing $30,000 a car, $31,000 a car. Now that sounds pretty good, but then you look at another part of their report and they talk about operating expenses and loss from operations. And they're losing a lot more money from operations that they're not counting into the gross margin. So they actually they reported like negative 477 million in gross profit for Q3 2023, but then when you take loss from operations, that was 1.4 billion. So their operating expenses are growing. Their operating expenses Q3 2022 were 857 million. That's up to 963 million for Q3 of 2023. And that's another place that you're losing money. One of the things that I love about Tesla, and you would watch Zach Kirkhorn talking in the past at earnings calls, and he would be talking about how they're focused on efficiency on the operating side too. It's not just the manufacturing that you have to be efficient, you have to be efficient in everything else. And it seems like Rivian is falling down on that aspect as well. So if you report gross profit of negative 477 million, but in reality, you lost 1.4 billion from operations, then really is your loss per car $30,000 a car or $90,000 a car, right? You're hiding your losses in operating expenses instead of counting for them in the production of the vehicle. Does that make any sense?
Yeah, so that I just took what everyone's focusing on because that's the product they're producing, but that's where my second red flag comes in is that they're talking about a second factory in another location or finding one. Why is that even news? When you have to focus on one thing at a time. Like Tesla didn't say, hey, we bought the former NUMMI plant and then we're gonna go find another one. No, we're gonna focus on that one, make lines in there, and when that's becoming full, getting prepped for the next one. They didn't go and do multiple things at once as if to jump the speed. It's not gonna go faster by doing more factories, more cars at the same time, and announcing more cars like the way that the regular automotive industry does. They say, we're going to make 15 new cars, 40 new cars, or whatever, right? But you don't need to do that. You just need to make one that's really good, one that's really profitable. And I think the one that is successful is a Porsche Taycan. Yeah, it's a different, price range, but they're not losing money on that one, right? And it's priced appropriately for its market. And right. They made sure of it, right? So they're making one good car. That's what's really good because off of that one, now you can build off of anything else if you want to, which they are. They're going on to SUV and so forth. But if you don't have one that's successful, why is the focus on going to the next one? And it's like even this operation side, the factory is just as important as the product. So we didn't even go over the factory part. You're mentioning the operating expense being way crazy high, right? So they're obviously spending a lot more in operations that's not efficient, that's not adding value to getting them revenue. There's something that's being in excess that's in the operations with that kind of huge loss. So why I hear stories of like, oh, maybe they're going to have a second factory and so forth, that's another red flag. I don't get it. It's like you don't need to do anything crazy. You just have to do one thing at a time. And this focus of doing one at a time doesn't seem to resonate with the industry because that's not how they did it. And that's the thing is like anybody could say, hey, I'm going to make a product, another automobile car, and just have a bunch of suppliers, just like the gas car industry has done for 100 years. And if that's the case, the EV side would be easy if that was the case. But that's not the case. It's upstart is more expensive for the EV, but the continual use of the TCO, the total cost of ownership, is lower for the EV. So you pay a little bit of a premium for the EVs, although now Tesla is making a case that it's not anymore after the price cuts. Even if the EVs are more expensive, the usage is cheaper. So you as a producer of it have to produce it economically enough for you to be profitable, but understand that it's going to be more expensive than gas cars. So it's, I could go on with there's other OEMs that I have concern with, even though they could be profitable because they modeled their whole business structure and business model like the automobile, like legacy OEMs. And that's what the problem is too, because the innovation in companies that I've studied and looked at also is that they changed the business model. And it's not new per se in terms of our knowledge of business, but it could be new to that industry. So Tesla became a software company with four wheels. That's what the analogy that people use. No other car company has done it. The software is kind of like a second thought, basically. There's multiple software, companies that's working different companies of the suppliers. So the OEM can't even go back and say, hey, let's rework this on their own. They can't. They have to go back to the suppliers. So you see this going back and forth. You want to change the stereo stuff, then you have to go back to the stereo maker, right? But then you have to integrate it into your own system. So you have this whole mess with the software. It's not in one central place and one company that's like handling it. So you can't go back and say, hey, just change that code there. Like, it doesn't work that way. You have to go back and forth. And that's only with one part of the car. You have other parts of the car, the safety parts, and all these other parts. Like, how are you going to collaborate with all these companies? You can't. That's why it's like, oh, you have to go take the car to the dealership to do an update, right? And yeah, Rivian has the OTA, but that's not the selling point right now. It's like you have to sell the vehicle that's profitable. The
Right.
OTA stuff comes later.
So one of the concerns I had early on was their first factory is in Illinois, and Illinois is not known as a state that is friendly to manufacturing today. They're, a union state. They're a state that supports, unions, where a lot of people who start car companies decide, okay, we're going to start our car company in a state that's non-union. And so, when Tesla started in Fremont, which in a sense was also, in my view, a mistake. I mean, ultimately they got the factory so cheap, I think it made sense. But, when they decided to build their next factory, they didn't go for California, they went for Texas. And Lucid, I have criticisms of Lucid, but they located their factory in Arizona rather than in California. I think a lot of companies figure that out, and Rivian's next factory is in a non a right to work state, so a state that's not friendly to unions and more friendly to manufacturers. So I think to some extent it was their choice of locating in Normal, Illinois, in a factory that apparently wasn't sufficient for their next generation vehicle that just kind of makes you wonder why that early decision to locate there. And the CEO is from Florida. The company's name Rivian is after the Indian River, which is near Melbourne, Florida. That's where he's from. So how did they end up locating in Normal? I don't know the history behind choosing Illinois, but it just seems like that was not necessarily the best choice. Do you have any thoughts on the decision to locate in Illinois? And then does that reflect on why they're building this new factory somewhere else? Georgia or South Carolina or something?
Yeah, it's the thing is, like, Tesla's situation was that, well, when you're a startup, your first thing isn't to do things ground up because it's harder. So you're gonna try to use the pre-existing stuff that's there as best as you can. And then when there isn't, that's when you start doing it yourself. And the thing is, they bought the factory, I believe it was 42 million when it used to be worth 400 million. So basically, they bought it for 10 cents on the dollar, and all the people got laid off. So now you can just rehire those people, right? At least certain components of the cars that's similar to build, besides the EV and the gas parts difference. But that's part of the reason why the economy was going down. They're getting rid of that factory. Is really cheap. So it would be cheaper for them to buy it and some of the equipment as well for basically a fire sale bargain that they could get. So that made sense why they were getting that factory there. It wasn't the most optimal. Obviously, now you see in Texas it's completely different design, but they're doing really great with that factory for buying it for that cheap. So I don't think the up cost for a new factory is 42 million for an auto company. I don't think it's going to be that cheap. So
Right.
that's also part that they can get away with just being in California, but they made the choice of being in another state where it's much more friendly to the business. So you see that gap where the circumstances in which they're in, they had to make these choices, and it was a very good financial choice. Nobody doubted that because you're being nobody's. gonna be like critical about someone buying it on 10 cents on the dollar. So the Illinois factory, I don't know why that location was the most optimal one. It doesn't make any sense to me. So they had to have reason for it. They haven't, publicly said it that I know of, but it doesn't make sense why you have it in certain places that's not financially helpful. Like I understand logistics, but if the financial part doesn't work either, like you have to have something that's overriding that financial reason. If it's going to cost you more, you have to have something else that gives you, maybe there's like SpaceX is in LA because they have a huge amount of aerospace engineers there, right? That's Elon has already said that many, many times. Like they're in certain areas because of certain logistical parts of it, right? Of critical to that business. Otherwise, you don't go out of your way to go in an area that's more expensive for labor and everything else. So I don't see that happening with the Rivian side. Like why is it there that and you're not in another state like Texas, Florida, or other states that's more friendly, no state taxes and so forth? It doesn't make a lot of sense to me. And they haven't made that clear. So when that's not clear, I can't follow the management's thinking and why they're doing those choices. So it makes me feel like it's the same decisions that the other legacy autos have been doing forever. They have these business decisions based on whatever else that's not conducive for the business to be more efficient, uh, to create a better product. It takes a different mindset to do that. And I don't see that mindset if you're not doing something different from what you've done in the industry and from up for 100 years. So you have to do something different when you're making a completely different product. And if it's following the same line of thinking or same actions, I don't see it as something different. So it doesn't give me more confidence. And that's where I'm more cautious about the manufacturing issues that they're having, which is not the highlight. They don't want to highlight it, obviously. Like you mentioned, it's like 1.4 billion. It's on one quarter. It's just that's not a number you want to focus on, but it's clearly the issue. And uh, Elon has focused on it, said it multiple times, made even a big highlight in several of the earnings call that the factory is the product. It is another product, and that can't be like understated even more. That is the product. He's made it a product, and it's made the huge difference in the production of the vehicles. It's a concept that wasn't publicly said. Like nobody thought of the factory as a product. So it's interesting to me that Tesla and Elon has made this happen. They've already had kind of a roadmap set, and yet people still don't follow it that much. They try to follow certain parts of it, but the core part that's the most important, that makes them such an efficient business, they don't actually utilize because it's a mindset that you have to have, the right mentality. And the reason why I say this is the mentality part is like there's a book called The Machine That Changed the World. I believe it's 1995 book on the lean production of Toyota and GM. And Toyota, for their factories, they go into a place like Kentucky where there is no union, but they pay higher than the average salary of the cost of living there, respectively for that job. So both parties win. The employees get paid more, and then the Toyota doesn't have to pay the union fees in a union fee like a union state. So they both benefit from them, and that's why they don't have a union issue because none of the employees can complain that they're getting better pay. So they made that arrangement, right? And then the thinking of the lean production, it's a mentality that has to change. So you can implement certain parts to improve your production, but GM was never able to do it because the mentality shift had to happen. They were never able to compete. That's why Toyota is more efficient. Even though it's 2% or so gross margin difference, but it's still huge when it's every single car that you're selling. You're selling 10, 15 million cars. So that mentality has to change. And if you're starting a new company, that's the best time. You build it from there. And that's why it's concerning to me that it's kind of following the same kind of thinking. And it doesn't seem that different from legacy auto in that aspect. So that's why the reason why I'm just sometimes I'm not as confident whenever I see some of these numbers and what they say, what more so what they don't say.
Okay, so there was this moment in Rivian's history, and it's roughly parallel with Lucid Motors, that Rivian had their IPO and they ended up with, I think it was either 16 or maybe even $18 billion in cash after their IPO, where Lucid did I forget what you call it, they did a deal they made it was CCIV. There was some sort of I forget the term for it. It was it was like a shell company, and that the shell company acquires Lucid. They changed the name to Lucid, and it's something that avoids reduces the amount of information you have to provide to the public as compared to an IPO. And in doing so, Lucid only got $4 billion in cash on their balance sheet. So when I looked at that moment, I said, well, Rivian has a much better chance of surviving because they have this big cash pile. Now, now Lucid had the Saudis as a backstop, and the Saudis have pumped more money into Lucid Motors over the last couple of years to keep them afloat. With Rivian, I wonder if there was a double-edged sword in getting this big pile of cash, which is on the one hand, it makes it easier for you to survive because you got this big pile of cash. On the other hand, it makes it easier for you to be inefficient because you have this big pile of cash, so you're not as worried about running out of money. And did they fail to focus on reducing costs because they figure, well, that's not a big deal. We got a big pile of cash. We don't have to worry about it. Do you think that may have played a role in it?
I think that was the biggest part because everyone that was looking at the IPO was saying, "Oh, they're flush with the cash. They're gonna be in great position, and they're gonna have enough time to build it out, survive the pandemic, etc." And I didn't think more money meant better. I don't think it means much. It just means that yeah, you have some money, you go to tap the capital markets, but that's why it goes back to like how much they're spending. And I was shocked that it was in the billions, and it still is right now. That's why like it doesn't matter if you have 16, 18 billion. If you're burning 4 to 6 billion a year, you're only gonna last 3 or 4 years.
Yeah.
And that equation doesn't match for me. Like that's like I can't figure out how people can look at that math and say they're on a great road to success. I just don't see it that way. And Tesla did not have that luxury. And yet they had to expand, they had to build infrastructure. Like Elon famously said about the supercharging, and it was clear that there wasn't enough of it. And he said, spend as fast as you can, but don't be wasteful.
Yeah.
Because they had to build it up, right? So just because you're building out doesn't mean, and you have cash because of the capital market, doesn't mean you're going to be wasteful about it. And Tesla has even throughout periodically laid off people because like their operations change or certain things are changing or they need different people and they don't need certain people anymore. So they do layoffs periodically too. So it's part of being efficient as a company. And directions are changing because they're adding more products and Dojo and FSD and more software related AI stuff now. So they're shifting too. So they don't need as many of certain people, and then certain people they need more of that they actually don't have enough of actually. So they have to do periodic layoffs, but you don't see that with other companies that try to do these actions where it's about being more capital efficient in the direction in which the company is going. So how could you be losing this much of cash on the operations side, and you don't like they improved. They went from a year ago, September of 2022, loss of operations was negative 1.7 billion, negative 1.79 billion in December 2022, negative 1.4, 1.2. It looked good, and now it's back up to 1.2 in September of 2023. So it's not getting like that much better. It's kind of going a little bit lower and then it's going back up again. So there's something fundamentally that is happening in operations that's not changing as opposed to the cars one's going from negative 171% to negative 36%. They're doing great progress on their actual vehicle, but the operation is not. So you can't have the operations still lose that much amount and not getting better, like straight across. They're kind of flat in terms of the improvement. It's not that much improvement in the last like 6 to 8 months. It hasn't improved that much. And you can't have that kind of loss at that rate. And the cash isn't that big anymore. If you're losing this amount, if you're losing 1.4 billion per quarter, 7 billion is not going to last you very many quarters. So that's what the other concern is. Yeah, I'm glad they have this other special deal with making delivery, vans for Amazon and so forth, but that's also not like exponential. There's a set amount of contracts, set amount, right? And Tesla did that in the early days, and so it's like the drivetrain. They deal with the RAV4 EV, and then they did with the Mercedes too. So I get these deals that's on the side, but that's not the main core business, unless that's where they're going to switch to. But there's the operation's not changing in terms of improving their losses. So that's why it's a really big red flag for me in terms of their financials. Like something's not right about that, and I just like I still don't get the explanation like how you could lose that amount of money and there is no fundamental change. Like you have to go back to drawing board and redo things. So selling more units. I hear a lot of it. It just sold more units. They'll get there. I don't believe that. If you're a negative gross margin per unit, it doesn't matter how many more units you sell. That's why I think you have to go back to the fundamentals and like reconstruct it. And of course, I know it's not the same thing, but conceptually it's the same thing as a designer. Is that Toy Story 2 was actually made first to go to home, straight to a home video, because they had the second unit do it, and then the director producers came in and said, no, we're going to actually make a feature film and release it to the movie theater. So they had the first team come in and redo the whole story. We revamped in the whole story and then redid it. It cost a lot more, but they redid the story correctly. And it went on to be a success. And now they have 3 and Toy Story 3 and so forth. So you have to go back to the drawing board and say, hey, we had these problems. You have to go back and fix this. It's going to be a lot of hurt in changing that. And I hope they're able to do that with the second vehicle that they're going to go. But the thing is, like, when you create this precedence, it's also problematic because now you have this R1 with amazing features, interior designs, like beautiful. And you go to the second vehicle and it's going to be like Spartan, minimalist. Then it's like, it doesn't feel as luxury anymore because you set the bar high. Whereas if you set your bar low and you start adding more to it, then you're continuously going up, right? That's what happened to Model S. They came out with it, and then they didn't have all these features that we assume it has today. They added on every single year, every single week. They added certain things and made it better. Yeah. But Rivian went all out, and now the second vehicles can't have the same kind of interior. So you have to drop it down. It's not a good mix when you're going forward that way.
I want to get back to this having the large cash pile. I think one of the reasons that Tesla became so efficient and SpaceX were so efficient is they didn't have the big pile of cash. So they had to be efficient. And Elon had to be ruthless in cutting costs in order to survive because, if they spent recklessly, they wouldn't have survived. And I think it's something where because the CEOs of Lucid and Rivian are insulated from the excessive spending by the cash piles, and in Lucid's case by having the Saudis as a backstop, they don't have to be as ruthless on cutting costs. So is it that Elon's just inherently really good about being efficient on spending, or is it that he was forced to be?
I think it's both because he has a focus and able to say, hey, we won't do this and do this and change direction. And that's a whole part of how he started with the vehicle programs. He had to choose certain things, and he was very much knew what he wanted in that product, and he didn't go in excess to make sure that the cost was there. Like even in the biography, like it lays out like how he went over the cost, the material list, and so there's this hyper focus on like even he was even concerned about the cost of the napkins at the reveal events, right? So you have to be cognizant about these cost stuff, and it like transcends on every detail. It may not be like, hey, it's just one napkin or one cup or whatever. You may not think it's much, but when you multiply by thousands and millions of those, then that becomes a huge cost. And every little bit of that on everything that you do makes a huge difference. So like being efficient had to be because they didn't have the luxury. Nobody believed that they could be profitable. You had other executives of former executives of the auto industry saying, oh yeah, great project, great Tesla. They're probably gonna, go bankrupt. That's literally the whole story that they had. And so they had to be super efficient. They couldn't tap into the capital markets right and left, or even just do it once and get this amount of cash. And that's the part that's like they had to be efficient because nobody believed in them. Now you already have Tesla that's leading the way. They paved the way, so it should be easier. Yeah, they have their own production hell, but it shouldn't be harder. So that's why it's like I'm not as forgiving because Tesla went through way worse and they were on the brink of bankruptcy multiple times because of it. And yet the other OEM EVs that's following suit doesn't seem to get that same criticism and doesn't have to go through that issue of like we're going to run out of capital.
Yeah.
So I think you're right on that part because if you see your bank account going to heading to zero, you're gonna get up and then fix that problem. There's no like, hey, let's just figure this out over the course of the year. I don't think you can have that luxury.
Do you think that Rivian will be able to, let's say they, on the path they're on, let's say they lose 1 billion a quarter, they're out of money in 2 years. Do you think that somewhere they'll be able to do additional cap raise and keep the ship going and potentially if the next vehicle is much more efficient that they might like I still think they have the best chance of surviving. I'm worried that they've baked in this carelessness with money. Like, what happened with Tesla is Tesla baked in, wow, we got to really be tight with our money and really be super careful. And if you don't bake that in early in the organization, it's hard to bake it in later. So do you think that there's hope that they'll be, like maybe they will run out of money in a sense, but they'll be able to do a cap raise and get enough money to survive long enough to get to profitability? Or do you think they're never going to get to profitability?
That's the most likely that's going to happen if they can make that shift enough. And that shift, it's still a relatively young company relative to the automotive industry, but that probably has to happen where they shift that mentality and then probably have to do a capital raise if they can, and then make the second vehicle super efficient into the cost. But I don't see how that's going to be possible. And that's the biggest worry is because if you build a culture and a certain mentality, it's really hard to shift as a group.
Yeah.
Someone has to come in and strong enough leadership to say we're going to go to steer it to a different direction. And we've seen it with other leadership in other OEMs. The leadership tries to come in and change it, and the culture is too strong in one direction of its old ways. They literally kick out the CEO.
Yeah.
So it's a really hard one if they don't establish that now, making those changes, knowing that they have to make those changes. But if you're going to be like sitting on the coffers of, hey, we have 7 billion still, and you could tap in for several billion more, and your mentality doesn't change, I don't think it's going to work that way. And I see plenty of Rivian around, but it's yeah, that's the part that I have an issue with, and I don't think if they don't do something like that kind of major shift, it's a month like the management's way of doing things and thinking doesn't change. It doesn't matter how much more money they raise, and that's the other part. Like if I don't see it and change the mentality of management and how they operate, no matter how much capital raise they do, it's just a matter of prolonging it, and that's what my concern is. Like, so it's not my concern they can't find cash and funding. It's the fact that if you don't change the mentality, then I at least as an investor for myself, I'm not going to invest in a company with that kind of mentality.
Right.
Like it's really important for me that the manager understands that cost efficiency and the capex needs to be controlled, and they have to make a product when they hit volume production, it has to be profitable. And as everyone looked at Tesla and saying, "Hey, you can't do it," and they finally do it, and from the very first product that they made from ground up, and yet all the other companies coming 10 years later are struggling. So it's not as easy as what people are looking at Tesla and seeing.
Yeah. So I'm looking, one of the things that I think people may not appreciate is they've got this plan to build a new factory in Georgia, and I'm not sure where they stand on that. Um, I can see in their Q3 numbers, they said we continued to take steps to further strengthen our balance sheet as we developed our next vehicle platform R2 and begin long lead time equipment purchases for our plant in Georgia. And then October 2023, we completed our green convertible senior notes offering, 2030 green convertible notes. So I think they may have gotten some financing to build. My concern was how much are they going to have to spend to build this new factory? And it looks like they've got loans that maybe are out to 2030 to build the factory. It may have been some sort of deal with Georgia to get financing for the factory. But if they have to spend a lot more money to get the factory going, that's a problem. What did they say? The offering was not complete until after quarter end. Accordingly, the $1.6 billion in net proceeds was not included in our third quarter cash equivalents, and short-term investments balance. So it looks like they've raised about $1.6 billion for this new factory through some sort of convertible senior notes, which is They borrowed money, and the lenders will be able to convert the debt into shares at some level. Um, we entered into capped call transactions with select financial institutions to increase the effective conversion premium up to $31 a share. Um, so I'm not sure I fully understand that concept, but it may be that they're not going to, they've got cash outside what we've talked about to finance building the next factory. Um, so yeah, I mean, I really come down to this. Like I look at them and I look at Lucid, and they had more money and they chose a better niche. I mean, the biggest thing for Rivian was they didn't decide to make a luxury sedan. They decided to make a pickup. And even with Cybertruck, I don't think there's anything that really directly competes with the Rivian products. And even if they do, I think this idea of EVs competing with each other is misleading because gas vehicles dominate the niche. So really, if you make a good EV, even if let's say it's not better than Cybertruck, but it's better than an F-150, well, then you still sell it. I also wonder if the R2 is going to be a half-ton pickup or a quarter-ton pickup. I don't think they've told us that yet. And the market for quarter-ton pickups in the US is a lot smaller than the market for half-ton pickups. So, I mean, you don't have any sense on the R2 whether it's quarter-ton or half-ton, do you?
No, no.
And
But
for those who are
the,
watching, quarter-ton would be a Ford Ranger and half-ton would be an F-150. And where I'm sitting in Thailand, quarter-ton pickups are popular and half-ton pickups you almost never see. In America, half-ton pickups are popular and quarter-ton pickups are not. So, yeah.
that's why I think the product is amazing. I don't think anybody's gonna say the product isn't good. But they did a phenomenal job building it. It's just like if you put too much stuff into it and you don't have the appropriate pricing, I mean, unfortunately, it's gonna go bankrupt. There's plenty of great services and products in business, but they went out of business because they didn't do the right cost or didn't have the right price. So they had to continue lowering the cost and then also raise the price, which they don't want to do.
Right.
So to make it happen, they have to raise the price and lower the cost. I don't think at the rate that they're going, they can just keep on doing cost cutting and then get to break even. That's the part that it's like they at some point they have to raise the price, and it's not the environment to do so because the interest rate is so high now. So it's just it's just maybe it is a little unfortunate part of the timing. They ran into the economic part wars and et cetera, and all these interest rate going up, and that didn't help them. But at the end of the day, you still have to be profitable at a certain point, and that can't be the only excuse
Yeah.
or reason. That can't be the only reason why. There's fundamentally something else that's going on, and I'd rather have a simpler interior, simpler vehicle, and keep the main part of the features, but simplify a lot more, and then get rid of these excess suppliers that they really doesn't add the most value to the vehicle. And that's kind of hard with the current vehicle because you've already set a precedence for it. So the next one will likely determine that. If the next vehicle doesn't follow a more efficient design, efficient cost in manufacturing, I'm not as comfortable as
And also if they don't get
Ford.
their if they don't get their other expenses in line, they're selling general administrative expenses and they're not more efficient in R&D. You know, they're not being efficient on SG&A and R&D, and that's what's driving up their operating losses.
Yeah.
All
So the second the factory is I mean, I don't know why the reason when they would go for a second factory unless like it's going to be more efficient, cheaper to build the second vehicle there, and maybe they saw it as they can't make it as efficient and cost effectively on the first factory. But that also means that you kind of trade it off with having this upstart of capital intense part of building up the factory
yeah.
from ground up, basically. So I don't know which one's going to be efficient. Maybe they calculate that to be more efficient than working in the current factory, but I think that's kind of a huge investment to make in the current factory, not get to volume production for the factory capacity and go on to the next one. So it's going to be like even a longer time for the return on investment to even to break even because
Right.
now you made another new factory to make a more efficient line. Let's say there's other reasons for that, I guess. They haven't really revealed, but if that was the case, it's still a longer leeway out there to get to profitability. And the amazement that I have is Tesla was able to do it in 18 months. So if they can't even get to break even in 2 years plus, then it's just something's not right about the build out. So I think it's a lot more than just hey, fix this part, this parts, let's get rid of this part, make it in-house and so forth. And I mean, if you looked at Tesla, they had to do things in-house. Literally, the suppliers didn't even want to make the parts, and so why they won't follow that major lead of the system motor and the interior, the drivetrain, and so forth. Everything that's the major part, the most expensive part of the vehicle, has to be built in-house because the supply chain of automotive is not built for the way that the EV business is built for.
I want to, there's a thought that I've been stewing on for a while and talking about a little bit that, when you're an investor and you're looking at startups, there's one thing when you have a company that's a going concern, that they've been profitable, they've been successful, like Apple, it's easy to see. It's easier to see the future for a company like Apple. It may not have the massive growth prospects of a startup, but you can see you can see what they're doing. When you have a startup, and I'm thinking about Aptera in particular, I'm thinking about Lucid, I'm thinking about Rivian, you're trying to get people to invest in a story. And, I feel like I watch a lot of these companies come along. Boxable's another one where like you're telling a story and hey, we'll throw solar panels on it because people like solar panels. And which is Boxable and to some extent and Aptera. Well, we're going to put solar cells on it and that's going to make a difference. And it's like if you tell a good enough story, people will buy it. And like I think Aptera's story has fallen apart. I think Lucid's story has fallen apart. I think I'm struggling to differentiate between whether Rivian just told a really good story or whether there's something more behind the story, right? Is there something more there? So like Lucid actually surprised me. I'll say something that's rare for me to say something positive about Lucid, but they did deliver a vehicle that had more than 500 miles of range. And it does appear that they actually had some innovation in vehicle efficiency that got them there. That they're not, they weren't completely blowing smoke. I think mostly it was telling a good story and there was some engineering behind it. I think Aptera is telling a great story and doesn't really have the engineering behind it. They just keep telling the story and they keep getting crowdfunding investment in, and they're running the company on the investors rather than running the company on actually selling a product. So how, not just for Rivian, but just sort of in general, when you see this kind of startup situation, how do you notice that people are falling for the story without asking the hard questions? And how do you see through stories that lack substance?
Yeah, that's the thing is that if you look at the waves of other EVs that's come and gone, uh, it does feature certain things like certain parts that you're talking more in detail. Like Lucid, they did deliver on a product. They did have a, it looks like a great car. The problem is that feature that they chose is not a feature that the majority of people care about because nobody's going to drive 500 miles.
Right.
Even if you put in the winter stuff or whatever, the cost doesn't make sense in terms of how you price it. So they can make a margin on it, which is still not as close as Tesla, and make a profit on it, but you can't sell enough units. So there's a balance, and it's I said it really simply, but it's like you have to choose the right features for the product to sell itself, and you make it a brand, right? So Apple's iPhone is about ease of use. It's not to be able to customize it, but the Android side is about customization. You want to do different stuff, be more creative with it, then you could do that one, right? So it depends on what your product is known for, and if that feature is valuable enough for the majority of the customers that you're targeting for. And the problem is with the Lucid, it's like nobody needs a 500-mile range car right now at that cost because you can't make it cheap enough for people to buy. And Elon said this from the very beginning because he got criticized about the Model S. And I did a post on it for Model S. They increased it by 52% in the last 10 years. For the very first day that they produced Model S, in 10 years, they increased the range by 52%.
Yeah.
From like 240 something to like 400, right? It's just, so the range could be increased with the battery chemistry improvements and the battery pack itself. But if you make the car too costly, nobody could buy it. And that's what the problem is. So it's not like you can't make a product with a certain feature that nobody else has. And that's a great selling point. But is it a feature that people actually need in the balance of their lifestyles? It's not. Like, right? Most people have like 300 miles is sufficient, for like 85 to 90% of people's lives. So that's not the right feature to focus on. Elon had already addressed that because he got asked that question 10 years ago. And
Yeah,
yet, here's a company that is basically basing it off of that one notion. Hey, we got the longest range car.
yeah,
So great. It seems like a great interior luxury car. The problem is the cost means that you're in a range of exotic cars. Now you're in a complete different targeted audience for your customers. Then, and how many can you sell at that price? Like how many people can afford that? You already limited yourself by how many people can buy it, right? And they're not into the cost cutting of changing it as low as possible. Whereas Model S came out, yeah, relatively expensive in the beginning. They still cut the cost, and they even did it for both S and X even this year, this past year. So they're trying to continuously make it cheaper, even in Tesla's being in production for 10 years or more. So in Aptera, I didn't like the product. I don't feel like it's safe,
yeah.
like by its design. Like, can I get my parents in there at that age, like elderly parents? Like, no, I don't feel comfortable. So you can tell me that the aerodynamics is great. The coefficient is the best in the industry or whatnot, best product ever, and you get the best mileage because of it. But nobody wants to drive in that. So the design can't be so extreme to the point that it feels unsafe to me, and it doesn't feel like it's the same kind of a jump from uh, the car experience, regular car experience, to that one. Seems like a little bit different. It's not even the same kind of class in that sense. So you can't just make a car that's like completely different and say that, oh, it's another vehicle that you can just hop into. Like even the Cybertruck design is very different. The interior is a a souped up version of more innovative version of what it is today of Model S and X. It's
Yeah.
not that different inside, right? Just the external design and the components inside that make it run is a little bit different, but it's not like so different to the point like it's a completely different thing. Where Aptera, it seems like that design, that wheel cover, it just doesn't feel safe to me. So
Well,
I feel like
it weighs 1,800 pounds. I don't think they're subject to the same crash testing requirements because they're a three-wheel vehicle. Yeah, I mean, like I look at the Aptera. I'm really more interested in the question of investors buying the story. But when I look at Aptera, this is where I see the flaw, right? It's like, okay, here's your story. It's got solar cells. It's got this aerodynamic design. It's got this three-wheel design, and that makes it more efficient. And this means you're going to get all this range when you add all this stuff together. It's like, okay, I kind of see the story, but when you get to your launch edition, costs about the same as a Model 3 or a Model Y with a tax credit. And I mean, I think the Model Y with the tax credit is going to be about the same price as the Aptera. And the Model Y seats five people or even seven, and it's way better in a crash. There's no way that the Aptera is going to perform anything like a Model 3 or a Model Y in a crash. Weighs more, et cetera. Um, I get to this question of like, who's going to spend $35,000 on an Aptera when they can spend $35,000 to get a Model Y? I don't. I don't see the decision
what,
making a lot of
what's
sense.
the trunk space? What's the trunk space for Aptera?
I think well, there's no back seat, right? So there's only I think that there's probably less cargo space than a Model Y by a significant gap.
I just don't see it plausible. Like that's
Yeah.
what people would buy the Model Y for.
Yeah.
That's why I got it.
You buy the Aptera because you want to be different. But I think the niche of people who are willing to spend that much money to be different is fairly small. But I want to come back to this question. You can see the same thing with Boxable. Boxable told the story, we're going to build this special house, and when I dove into the details in Boxable, it's like, okay, but your cost per square foot building that in California is like $400, right? And maybe that makes sense in the California market, but it doesn't make sense almost anywhere else in the world to build something that's going to end up costing $400 a square foot when you're done with, setting the thing up. And then, all of a sudden, I don't know if you follow Boxable on X, but they've been posting about all the challenge they've had with like zoning restrictions and other problems, and they're not able to get it. Like, you sold this to us as this is going to be easy, this is going to be great. We've got this whole regulatory environment in California that's going to make it work. And then all of a sudden, you're not able to build it in some state that's not California, like you told us at the opening. So I just think there's this challenge for investors. Like, look, I want to start up a company, and I've dragged my feet quite a bit on this. I never set my mind to let me do a crowdfunding round now and raise money based on just a story. And then I'll bank $2 million and then I'll spend money hiring engineers and then we'll see if we can actually build something that works. And I don't feel comfortable being a guy doing that. I want to spend my own money, be efficient, right? Because it's my money, right? And get a prototype working and get a few prototypes done. And then once I actually have prototypes that are legit, then I can go to people and say, hey, I've got something. Now I want to raise money so we can manufacture. I don't see myself, I see what others have done. I'm like, well, I guess I could sell a story too. And you make one prototype that looks kind of like what you're doing. You bring it to a county fair and you show it off and you make videos. Um, I think you end up spending so much money raising the money that you don't end up with that much in the bank after you go through all that. And then, the challenge is getting to execution. So, but this question that I'm struggling with that for the people who are watching this and they see the next startup, maybe it's Warren's Podcar, maybe it's some other startup out there that somebody's got. How are investors who want to support startups supposed to tell the difference between the bullshit story and something that actually has legs? I don't know the answer to how to explain that to people. I think I can see the bullshit when I see it. I don't think I'm as likely. I mean, I made a little bit of a mistake with Arcimoto, but I only invested a very small amount of money. Um, how do people see through it?
Well, just certain parts that you mentioned. The third point that I wanted to make was the founder investing his own money into the company. Elon's still the only one. The
Yeah,
OEM EVs, Elon's the only one that's putting his own money and pretty much majority of it.
yeah,
Half of it SpaceX and half of it into Tesla. If it wasn't for SpaceX, he probably would have put it into Tesla. So pretty much majority of his net assets, or pretty much all of it, he put it into SpaceX and Tesla. That's not the trend that I see. I don't. It's not even the nominal amount that they've made it clear that the CEO founder is investing in it. They just tap the capital markets or the private investors first and do so. So that's why I feel like there's no urgency because you're not losing your own money. Like if it's some far off place of some other strangers, you're not going to care as much. But if it's your own family that has an issue, you're going to care a lot more and you're going to do something about it. And I don't feel that urgency when it's not their own money, and that's why I've seen that trend. Like and yeah, when that happens.
yeah. I mean, and that's my pitch basically is assuming I ever get to the point. I've spent about $10,000 or $20,000 on this stupid idea already, but I anticipate once I settle on a location, like right now I'm in Thailand, it might be here, then I'm going to invest about $100,000 over 2 years building prototypes out of my own cash. And I think that makes it more credible that, hey, Warren put his own money on the line to make this work, right? I wasn't thinking about the credibility point. I was actually just thinking, I don't feel comfortable taking other people's money until I know I have something, right? And I feel like a lot of these, like Peter Rawlinson, I don't think put any cash into Lucid. I think RJ Scaringe may have put in some early money into Rivian, but he owns like 9% of the company or 9% of the voting stock. They did something with Rivian where they like have voting stock and regular stock. Aptera also has like, I don't know how many classes of stock. They have several different classes of stock, which to me, that's a red flag. That's a big red flag. Like Tesla has one class of stock. I think SpaceX has one class of stock. I don't think there's like separate classes of stock. I think now Facebook has a separate class of stock, and maybe it works in that context. But I just think that's something to worry about when you start seeing like every investor is getting a different deal because a different class of stock has different terms. That seems uncomfortable to me. Does that make
Well,
sense?
that's the thing. That's the thing. It's like that's exactly the reason why that mentality makes sense. Like that action means those two things, right? One, you as a founder is thinking about what's right and what's most efficient in terms of your capital usage. And second, as an investor that's going to be investing into your company, you want the founder to be on the same page as you, meaning that if you lose money, the founder is losing money too. But if the founder doesn't put barely any money into it, then you're not on the same page. So my mentality was if I put a little bit of my money, which is, tiny sum compared to what Elon did, and I lost that money, I wouldn't feel as bad because he's gonna lose $50 million, right? So if you're in the same page, you're on the same like direction because you've invested together basically in that sense, then you can feel a lot more confident about it because they're gonna lose just as much as you are losing. So if you don't invest in it as a founder and then you're a private investor or a secondary investor on the market, you're not on the same page. You can't say that you're on the same page because of that technical difference. And so that what that means is that management isn't going to be thinking, hey, I need to do this right, not just for myself, but investors. But if you do yourself right, you're going to do it right for the investors because you're on the same page. And so the mentality for the management side of to being efficient and making the product right and making it happen is much more credible than one that doesn't. And every company that's capital intensive in the startup is going to have a bind when something doesn't go right and they need funding or the cash is low, whatever. Then when the founder has money to put it in themselves, that's another way of de-risking the situation too. That's why it's like, well, Elon has some cash of its own that can stop certain bankruptcies, which did happen, and with the help of obviously other investors and companies that invested in Tesla. But he had to put in money too to convince them, right? Yeah. So that cash that you're putting as a founder is another way of having credibility and also convincing others, hey, let's go this in together. But you can't say that if you're not doing it. So that risk becomes much greater when the founder doesn't have the cash or doesn't want to. So as an investor, if I'm looking from the outside, that makes a huge difference in the way that the management is thinking and what that means to the investor or the future of the company. Because if you lost everything as a CEO and you didn't put anything into it, you didn't lose anything.
Right.
So you can't say that it's going to be okay and have me believe that. And that's what happened to all the other OEMs. Because Hanya Frisco made a company. It's like that company also made a beautiful car, but we don't lack a beautiful car. There's plenty of beautiful cars. That's not the feature we need. We need an EV with a cost-effective battery and make a profit on the car, right? That's the main part of the EV business. But people want to focus on all these other elements. That's not the most important part of the EV car. So I've seen that so many times go through in so many ways, and we go through the same thing again, and people talk about the same issues like, oh, the demand issue or economy or, there's other reasons for it. But no, it's not. It's the drawing board from the management at the end of the day had the biggest impact.
What
yeah,
about,
there are other components.
What about when you see like I remember the term when Lucid had their the equivalent of an IPO, it was a SPAC merger. So CCID was a SPAC, a special purpose acquisition company, and then they have their merger and they avoid a little bit of SEC scrutiny on that process. One of the things that I think you see is you'll see like the early investors get in $1 a share. And then there's a next level of investors that get in at like $5 or $10 a share. And then they offer shares to the public at $20 a share, and you still haven't made a product, right? You still haven't sold the product to a customer, and you're selling shares to the public at $20 a share when you're early, the founder and some early people got in at $1 a share. Like, well, what have they done to justify you investing 20 times as much money as they did? And they're getting a voting class and you're getting non-voting class, right? So they're getting more valuable stock. Like that's one of the red flags for me. Is that something you look at when you're looking at this stuff?
If it's a SPAC, I'm very hesitant investing for that reason because you don't have the same rights, even though you're putting 20 times more. That doesn't sit well with me. Right. I can't confidently go into a SPAC and say, unless the SPAC is built in a way which I don't think it's ever going to be built in the way that the other investors that come in is going to be equally treated equally. I don't like you can't be paying 20 times more and have no voting. That wouldn't sit well. That's why I would never invest in that. It doesn't make any sense to me.
All right.
I don't know how other people justify it, but they come with their own conclusions. I can't confidently say and invest in that kind of situation.
Right, but I think the reason other people buy into these is they get sold a story and they like the story and they like the personality. Like one of my examples recently is there's this guy, Gary Black, who's a big time voice in the Tesla community. I don't think he deserves the status he has. That's a whole long conversation. And full disclosure, Gary's blocked me now for the 4th time, and I blocked him on X. But Gary had his own. He was trying to basically raise money for investors to invest in his investment management company. And I went through and I saw like all kinds of holes in that story. But because Gary has this presence and he has this following of 300,000 plus people on X, and there's something about his voice, there's something about the way he presents himself that you can have, like Peter Rawlinson's the same thing, right? There's the British accent, there's the experience, and you just buy into the credibility of the person. and somehow that gets people to invest. And look, maybe Elon had some charisma and that got people to invest in Tesla early on. And got people to invest. Like now, Elon gets people to invest because it's like, well, this guy turns everything into gold, right? He's got a track
Exactly.
record of turning it into gold. But I feel like people are, to some extent, we're all suckers for a story. And you know, is there somehow, like with both Arcimoto and Aptera, it was, oh, Sandy Munro's on board. Oh, Sandy Munro's on board. That's the story. Like, well, so what? And that's the response people have been saying to me about Aptera when I've been criticizing Aptera lately is, well, they got Sandy Munro on board. Well, Arcimoto had Sandy Munro on board, and that didn't solve the problem. Um, I saw different issues with Arcimoto than I see with Aptera, but anyway, I think that's the thing is like, are people susceptible to the story? And how can people protect themselves from falling for the story?
And that's the biggest distinguishing part as an investor. That's the distinguishing part. Like I look at the management, the people, and Elon before Tesla had already been a successful entrepreneur. He had Zip2, he sold PayPal. So like it's not like he didn't have any track record in understanding business and doing a startup. So it's a very different setup than Peter Rolling. And also like you listen to some of the comments that they make, and when like Peter Rolling went and said, oh, it's only at Tesla you have production hell, and like, oh, I can do it better. Well, when you say stuff like that and compare yourself against established company and visionary leader, and you don't have any credibility, as if to that's gonna make you more credible. That's not a good sign for me as an investor to look at that management as a credible management that's in the right focus. You shouldn't be focusing on other people's products or the way they do things. It doesn't matter. Like if you know that your product is good, you're gonna focus on your product. You're gonna make sure that your business is gonna be great and it's gonna be on the road to profitability and it's gonna sell, right? If you're confident about a product, you don't need to compare yourself to others. And that's the thing. It's like when you have to compare yourself to the industry leader, you're already not the same level as that industry leader. Otherwise, you don't need to compare yourself.
Right.
So you can come in second or third, but there's no reason you need to take shots at the very industry that they paid their way. You're following their footsteps, and then you take a shot at them. Like it doesn't make any sense to me. Then that within itself is a red flag as a leadership. I don't need that. I don't need a leader that's focusing on trying to bash other companies of your same industry. When you haven't made a product that's profitable, or at that point he didn't even make a product, he didn't even have anything besides a prototype.
Yeah.
So those are the red flags that I see. Like and just because you have Sandy Munro, like you have to know what that person does. Sandy Munro is an expert engineer. He's not there to say, hey, change the whole design of the vehicle, change the strategy of the business. He's there to help you make the most efficient manufacturing changes to make it the best cost-effective vehicle. So he's not going to go and change everything the strategy of the business. That's not his job, and that's not why he's on board. So you can't just say that, oh, just because this credible person is on there. Like, what is their job that they're doing? And if their track record doesn't show for it, like even like portfolio managers, they don't have a right track record. I don't really need to believe it as much of what they're saying. They could have certain things that's correct about the analysis that they're making. I don't fault their work. It's just that I choose not to follow them because I've been in very long time with Tesla. I've seen auto analysts that came on board that bashed it, and and they changed. Some of them have changed their position and become bullish about Tesla. I still don't look at their numbers as a credible number. I'll do my own calculations because that's what I did. If I believed them, I would have never invested in Tesla in the first place. Right. So yeah, some of them have great analysis of today's stuff and so forth. So I still look at it and glance it over, but I don't make my primary decisions on it. I have to make it on my own on companies like Tesla or even Rivian. I can't rely on these analysts because they don't have a better track record than I did. If they don't have a better track record than you did in terms of these generational companies that they're looking at, I'm not going to have to look at that. Now, what I believe the analysts are really good at is businesses that's been around for a really long time. They know what's predicted to happen next. That's what they're there for. Like Apple right now, the trajectory is going to go steady. They're going to have their business grow and so forth. They're not going to have something like crazy new stuff that's going to be completely different that nobody could model. And so that's what they're really great for, and that's what their job is for. And the other thing is that they don't want to lose money for their clients. So they have to focus on certain things that cater towards their clients. That you as an individual investor, you don't have to do that. And so you can see it from a longer term perspective. So it's really important to look at people's track record and where they're coming from when they're talking about the subject matter, especially when talking about financial information or investing stuff. It's like, are they credible because of what their position is or what their popularity or so forth? And but you have to look at the actual numbers behind it, whether it's a business leader or as an investor or as an analyst. And I feel like people don't have the time, or they don't want to, or they can't understand to go into that detail to decipher, hey, maybe this isn't the best one, or maybe I can make a decision on my own, because they have their own full-time jobs or what they do. They're too busy to look into it. So that's where I come back to my conclusion, because I've seen that happen so many times. Uh, People invested in Tesla, it tripled, they sold out of it. They didn't think it's going to make it. So it's like, oh yeah, this one looks like a good product, I'll just invest in it, and then they just sold out of it 2-3 years later.
Yeah.
But they didn't look at comparing what's happening with the industry. They didn't look at Elon Musk, what's his history compared to other CEOs and other entrepreneurs. They didn't make that comparison. So if you don't look at the track record, where they're coming from, and who they have on board for what, you have to make that decision. And that's ultimately the decision that makes the bigger difference, because the financial modeling is modeling stuff that's happening now and it's going to happen in the immediate future. But if you're making a product that's not going to happen today or next 6 months, you can't rely on that information either, because it's not going to bake into it. Like most of the financial analysis for Tesla does not include FSD or AI Optimus, none of that stuff. It's not real today. But if you use that numbers, you're not going to be able to say that, hey, this is a better investment, because the numbers aren't there.
Yeah.
So you can't base a lot of the stuff on these numbers if you don't understand where the position is, what their their duties are for the job, and what their expertise is. That has to be qualified before you make a decision. Hey, maybe this person is credible or not credible. So that I've never had to rely on analysts for that reason, because I know what their job is for and what their objective is, and it's not the same as mine.
Okay. Anything else on your mind before we wrap up?
That's all for now. For now, I guess. But yeah.
People can find you. It's SA Futurist on X.
Yes, SA_futurist.